Good afternoon and welcome to this ACT webinar on investing in repos. Before we get going, a few technical points about our webinar setup. You have the ability to move the various windows around your screen to resize or minimize them. There is a Q&A box, which if not already showing, can be opened by clicking the Q&A button along the bottom of your screen. The green button with a question mark on it is for help if you have any technical difficulties. Then at the end, we'll be asking for your feedback via the red widget at the bottom. I'm Michelle Price, Associate Policy and Technical Director here at the ACT. The format of this webinar is to have two presentations followed by time for questions and discussion where we can take questions directly from you. So let me introduce our two speakers. First we have Steve Letherby, Vice President, Global Securities Financing Sales for UK, Ireland and Americas at Clearstream. Steve is responsible for day-to-day tri-party sales, relationship management and client implementation. We also thank Clearstream for sponsoring this webinar. We will then move on to hear some practical experiences from Nick Calio, who is responsible for day-to-day dealing of short-term investments, including repos, in Shell's Central Treasury team. When it comes to questions, you can send in questions via the Q&A window throughout the webinar. We won't broadcast your name or company details. A recording of this webinar will be available on the ACT website in 2 days' time, along with a copy of the slides. So moving on. Traditionally, the repo market was used by banks and central banks for interbank securitized borrowing and lending. Pre-financial crisis, there were very few corporates using repos as an investment product. Post-crisis, corporates are increasingly injecting cash into the repo market, but the take-up is relatively slow. Back in November 2012, the ACT published a briefing note entitled Practical Steps to Investing in Repos. This is available on our website and we plan to update it in the next few months. Before we move on to our two speakers, we have two quick poll questions in order to gauge the level of repo activity amongst our audience. So I'd ask that just the corporate treasurers in the audience answer these questions, please. The first one is, have you considered using repos for investing your surplus cash? No, we haven't considered using repos. Yes, we are considering using repos. Yes, we have considered but have decided not to use repos. And finally, yes, we are already using repos. If you could answer those questions, please. Okay, just waiting for the results to come through. Okay, so we have 40% haven't considered using repos, and another third are considering repos. And in fact, I was expecting the majority to be in that second box, so it's a little bit different to what I was expecting. And we've got 21% already using repos. That's interesting as well, a little bit higher than what I'd anticipated. Okay, moving on to question 2. And again, if we could just have the corporate treasurers in the audience answering this. To what extent are banks introducing their idea of investing in repos to you? Number 1, no conversations are happening. 2, just 1 or 2 banks have discussed this. And finally, more than 2 banks. If you could just answer those. And the results are coming in. Okay. So nearly half are saying at the moment conversations aren't happening.
Interesting.
Steve, do you comment?
Yeah, I mean, I must say this is an issue or something we're finding throughout the market. We're going out to our corporate prospects talking about tri-party repo. I think what you tend to find is a lot of the corporate sales relationship teams within the banks are probably not quite aware of the repo market, and there's a bit of disconnect between themselves and the triparty repo desk or repo desk within the bank itself. So I think my job and our job within Clearstream is basically to educate both the corporate sales teams within those banks to maybe speak more with their repo sales desk. I think it's extremely important. So I think the responses here aren't surprising. I'm very happy that half of the respondees here have said that the actual banks are discussing the subject with them now, which gives me only half a job to do, basically.
Brilliant. Okay, thank you everyone for participating, and let's move on to our first speaker, Steve Letterby from Clearstream.
Okay, thank you, Michelle. Good afternoon, everyone, and thanks for joining the webinar this afternoon. As Michelle kindly said, I work on the sales and relationship side for Clearstream, responsible for our triparty business. Just to give you an idea of our experience in this field, we've been carrying out triparty repo for over 20 years and currently have over 650 billion euros outstanding in triparty on a daily basis, covering over 450 counterparties. Those counterparties ranging from central banks to the commercial banks, broker-dealers, asset managers, and of course corporates. The number of corporate customers for us has been growing steadily over the last 2 years, and in this area the market for Clearstream has almost tripled in terms of numbers and volumes. In the next few slides I'll try to explain why that's the case, but before I do I'd like to just briefly explain to you what a repo and also what triparty repo is. Okay, so what are repos? A repo is a repurchase agreement, also known as a repo. It's a sale of a security together with an agreement for the seller to buy back the securities at a later, often predetermined date. The repurchase price would be greater than the original sale price, difference effectively representing interest, which is normally referred to as the repo rate. The party that originally buys the securities effectively acts as a cash provider, and the original seller is effectively acting as a cash taker, using their securities collateral for secured cash loan at a fixed rate of interest. If you look at the first diagram here on day one, you can see you've got the cash taker or the collateral giver, securities moving across to the cash provider as cash principal. And then you look at slide 2, we've got the termination of the trade, T plus N, where basically the securities will be returned to the original owner, which is the collateral giver, and the cash principal plus the accrued interest going back to the original cash provider. Next slide. So what is a triparty repo? Okay, the core feature of a triparty repo allows you to use an agent such as Clearstream to manage all of the administrative tasks associated with the repo itself. Both parties, the cash giver and the cash taker, appoint the collateral management agent, i.e. Clearstream. Then the trade terms are bilaterally agreed. Now what you can see from the diagram here again is in the grey box in the middle you have the trade details. So you have the currency, so maybe US dollar, maybe euro, could be GBP. The principal, which is the amount of cash that you're willing to give at any given time. You've got the repo or the interest rate that you have agreed bilaterally with your counterparty. You've got the collateral set or the basket. Now basically this is the collateral that you're willing to accept in exchange for the cash that you are going to give. And finally you have the trade date, or we call it the term. So basically the amount or the time that you're going to put your cash out to your cash taker for. Okay, so then of course I think we need to look at basically how this works in the diagram as well. So the way that the trade takes place is once we have the matching instructions on here, so the trade details match from both the cash provider and cash taker, and they both agree that they're exactly the same, then the trade will open. Now what you will have is the cash will move on to the triparty collateral account from the cash provider, and on the other side Clearstream will act on the cash takers providing, moving securities on a DVP basis. So as cash moves one way, securities which obviously are within your collateral set or your collateral requirements will move the other way. And this, as mentioned before, is all delivery versus payment. So this means that at no given time are you exposed to your collateral or cash taker. Then during the life cycle of the trade, obviously what Clearstream act on as the collateral management agent is that we actually monitor the trade. So we look after things like the margin calls, any markup or markdown. So the value of the collateral itself, for example, if the value of the collateral should go down, then obviously we'll bring more securities in to cover that particular exposure, and the other way, if there is too much collateral or the collateral is exposed higher, then we move collateral back out again. We also manage substitutions. So, for example, if your collateral provider wishes to sell a bond and needs to substitute a security back out again, Clearstream will manage that whole process. Obviously, a bond cannot be substituted unless they've got eligible collateral to replace that bond. Finally, when the trade closes, we will ensure that the cash and the collateral then moves back to its rightful owners. And of course, the cash will move back with the relevant accrued interest. Okay, slide 3. So what are the benefits of triparty for the corporate treasurer? Right, okay, number one, reduces counterparty risk. So for example, when you enter into a repo, you're doing so against securities. So should your counterparty default, rather than losing the cash as you would do on an unsecured deposit, you will have the collateral with sufficient margin included, when I say margin I mean haircut, included to liquidate and get your cash back. It's very important. Also, rather than having all your cash tied up in money market funds or term deposits, for example, triparty gives you another avenue for your cash investments. By choosing an agent such as Clearstream to manage your repo activity, you know that you are working alongside a company with over 20 years of experience in collateral management, with the industry awards to back this up. Just to give you an example, we've been rated the top triparty agent for the last 9 years by a global custodian magazine, and of course, the collateral that you have is all managed under Luxembourg law, deemed to be one of the most secure legal jurisdictions. And finally, and probably most importantly, you control the type of collateral that you wish to receive. I think it's important to state that. With there obviously being a correlation between risk and reward. When I say that, obviously the riskier the collateral, or the further down the yield curve you're willing to go to with the collateral you're willing to accept, the better the reward or the higher the yield you're likely to get. And again, these are on the terms that you want. So you decide the currency, you decide the amount, and you decide the length of the trade. And of course, the operational burden is taken out of your hands, because that's all managed by us as your Clearstream or as your triparty agent. Finally, sort of while I'm on the slide, really to quote an example really taken from the ATT briefing that Michelle mentioned just now. So as a very good document, they mentioned something about the 3 C's, which in their eyes are collateral, counterparty, custodian, which I think are very important things to note. So why is repo becoming more relevant to the corporate treasurers? Well, many are now looking to reduce their unsecured activities. In the current economic climate, can you be seen as being a responsible treasurer by placing all your cash unsecured? I don't know. If I remember, I went to an ACT conference in Dublin a couple of years ago, and one of the speakers was a group treasurer who happened to mention that basically he wouldn't place his cash unsecured with a European bank over a weekend, because basically he said, I wasn't sure if that bank was going to be there on a Monday. That's something that's worth considering. Next, there's the risk of bank bailing. This could become a distinct possibility in 2015, 2016. Again, I know ACT have been lobbying very hard on this, and I think there's some interesting articles on the website covering this. Could we go the way of Cyprus? I mean, we sincerely hope not. But the fact is, if you're placing your cash unsecured with a bank, you obviously run that risk. Next, we have the reform of the money market fund industry. The movement possibility going from CNAV to a VNAV, from a stable NAV basically to a more insecure NAV, variable NAV should I say, and also the fact that the funds could potentially lose their AAA status, could potentially become unrated. Well, there's also the change in the way that the ownership of collateral is viewed. The fact that you have the ability to triparty to reuse the collateral received to cover other obligations such as OTC derivatives exposures you have with other counterparties as opposed to using cash, all managed by your triparty agent. In fact, you can even mirror the baskets that you receive collateral in to then mirror collateral that you then would give to other counterparties. Of course, this needs to stay within the Clearstream triparty world. And finally, due to the Basel III regulations, your relationship banks are now seeing a shift towards taking cash from the corporate client on a secured basis as opposed to unsecured, especially long term, as a way of providing balance sheet liquidity. So why is collateral management becoming so important? Okay, the banks are now looking to squeeze as much value out of the collateral that they hold. Optimization is the key, and the ability to mobilize that collateral, i.e. the ability to have the right collateral in the right place to gain the best economic value, is becoming vital to them. Then there's a change in role of cash, and the ability for corporates to be able to ring-fence the cash against collateral rather than leave it with a bank on an unsecured basis, fully managed by a third-party administrator. There are also now a number of trading facilities available to both the corporate treasurers and the banks in triparty. For example, we have a link up with 360T. I'm not sure if you're aware of them. They are a leading FX corporate-to-bank trading platform. They have a module on their platform which basically allows you to trade triparty repo, where the instruction comes both from 360T for both you and your counterparty, i.e. the bank. So basically, once you've executed the trade, you don't have to do anything else. And obviously, the collateral management is then all managed through via Clearstream. We also have a similar tie-up with Bloomberg, where basically only one leg of the trade is actually the instruction is done by Bloomberg. The bank also have to instruct on their behalf. But again, the collateral management is still carried out by Clearstream. I think Nick will mention that in a bit more detail in his slides further on in the presentation. Another reason is the fact that the eligibility monitoring of collateral can be extremely granular, giving you, the collateral receiver, far more control of the type of collateral that you receive. And finally, as I've mentioned before, the fact that you have the ability to reuse the collateral received in triparty to cover other obligations that you may normally use for cash is an extremely powerful tool. So finally, moving slides, how do we get started? Okay, so I've given you some background as to reasons why triparty works. Let's now talk into how to get this set up. A triparty repo relationship can be started using these 5 easy steps. Now, I suppose number one is really appointing a collateral management agent, i.e. Clearstream. That will mean obviously going through relevant KYC, setting up an account with Clearstream, very similar to setting up a standard bank account as you would do with any other counterparty. Secondly, agree and sign legal agreements. Now, there are 2 ways you can do this, and this is extremely important, and I know that sometimes it's been a barrier to entry. I'm not sure if you're aware, there's something called a GMRA, which is a Global Master Repurchase Agreement, which is basically your bilateral agreement between your counterparty to trade triparty. Now, in the standard setup, you need to have an individual GMRA with each of your counterparties. So you will discuss this with a bank, for example, agree it, and then once you're signed, you're ready to trade with them either on a bilateral or a triparty basis. You also have the triparty agreement, which is Clearstream's Collateral Management Service Agreement, or a CMSA. Now, the CMSA basically is an umbrella agreement that allows you to trade triparty within Clearstream's triparty program. And once you've signed it once, it then allows you to trade with any of the counterparties within Clearstream. Now, the second option you have here is either trading or going via our all-in-one Collateral Management Service Agreement and our CRCs. The CRCs being the Clearstream Repurchase Conditions. Now, these are a multilateral master repurchase agreement, which is basically we've released about 6 months ago. It's not a replacement for the GMRA. What it means, it allows you to trade in a GMRA type scenario, but within the Clearstream world. So again, what it means is that once you sign this document once, you don't need to sign it with any other counterparty. So it really, a GMRA is, as you're probably aware of, people that discussed GMRAs before, can be quite time consuming. It can also be quite expensive to set up as well. And because they're set up on an individual basis, you need one for each of the counterparties you trade with. Under the CRCs, it means that, again, it's multilateral. You sign this once, and then you'll be allowed to trade with any other counterparty within Clearstream's triparty program that have also signed up to the CRCs that under the same GMRA type agreement. So it covers all the things like netting, closeouts, for example, event of default. That's all covered within the CRCs. It's quite important, I think, that this is GMRA has historically been maybe a barrier to entry for a lot of corporates within the triparty world, within the repo world. The CRCs within the Clearstream world, it's going to speed up that process, and also it will make things a lot cheaper for you with regard to setting up agreements. Finally, the next one we have agree and set up your collateral eligibility schedule. Sorry, it's quite difficult to say that. Basically, this is your collateral basket, the collateral you're willing to accept from your cash taker. Now, again, I think Nick may go into a bit more detail on this, but basically you have the freedom to decide the type of collateral that you're willing to receive. Next, we talk about the operation requirements. So basically, you choose the platform that you wish to trade on, or how you wish to instruct, whether it be via 360T, whether it be via Bloomberg, or you may wish to use Clearstream's own web-based front-end tool created online to do your instruction. And also you agree your standard settlement instructions as well. And then finally, last but not least, you are then ready to trade. And then it's a question of agreeing the terms with your counterparty on the trade that you're willing to carry out. That concludes my presentation on that side. I'm now going to hand over to Nick, who's going to give you some practical experiences from Shell.
Afternoon, everyone. Thanks, Steve. So I'm going to give you a little bit of practical advice that we've been doing here at Shell, and we've been investing for repos for a number of years now, and find it a brilliant tool to actually use in managing our cash. So one of the things that I want to sort of go through is, why invest in reverse repos? And it's almost made a non-brainer in a sense, because you basically got a reduced risk to your counterparty. And what I mean by reduced risk, that if your counterparty was to go under, you've got the collateral. You take ownership of that collateral, so you've got some cash behind that to actually sell that through when you go to the market. There's one thing that I found quite surprising when investing in repos. You'd have thought by taking high-quality collateral, you'd be penalised on the rate compared to unsecured borrowing. Unsecured lending. But when you look at this, we found the unsecured deposits pay a very similar rate to our repo in the market. So we haven't been penalised by trading repo rather than going unsecured, which is quite interesting when you consider you've actually reducing your risk to your counterparty and you've actually got the collateral behind this. There's one thing that's handy to know is you've got constant mark-to-market valuation of your collateral. So once you agree a trade with your bank and your bank passes over the collateral, Clearstream will constantly value the collateral. So if the collateral value or the bond prices you're accepting was to dip in value, Clearstream would request additional collateral from your bank to keep the value of the collateral constant. And this happens continuously throughout the day. The other thing that's worth pointing out using repo is your ability to actually reuse the collateral. Maybe you have initial margins that you need to cover. There's a possibility here that you could actually use your existing collateral and actually post it at an exchange or to cover any margin that you need to acquire. The other side of things you could look at when you're investing in repo is you can actually re-repo your collateral. So if you have a large cash call in the day, you could potentially re-repo your bonds out with another bank and actually bring in cash. There's another source of funding with your existing bonds, which is all possible with repo, and also this is not possible when you invest with an unsecured deposit. So based on what I've just said here, it's quite surprising that not many corporates are actually using repo. And there's one thing that Steve said, it's this complex GRMA which you actually need to sign. We've had the experience going through this with our counterparts, and it can take a long, long time to actually sign this, going backwards and forwards from one legal to another. And obviously it's very time-consuming and obviously quite expensive with legal fees to try and get the GMRA in place. But obviously Clearstream now have come up with this CRCC, which allows you to sign one document, and then you can trade with all the banks. So in my sense, that's one of the biggest hurdles of actually getting into repo. And it looks like Clearstream here have actually come up with the document that allows multiple trades with different banks rather than signing a separate GRMA with each individual bank. One of the other things to mention with trading repo in the past, it can be an extremely manual process. How we sort of used to trade this was over the telephone, so we'd end up calling the bank, asking what the repo rates are, agreeing a trade over the telephone. Then we'd have to manually input this into our treasury management system, and then from that we'd have to manually enter that into Clearstream's system. But Clearstream now have been working hard with Bloomberg and 360T to actually develop a more automated process here. So effectively, it's the same process you would use to and time-wise as actually inputting a normal trade that's unsecured. So they've eliminated a lot of the manual work that's involved in a repo. One of the other things with repo is it can be quite time-consuming in terms of if you've got to actually manage all the bonds, the valuation, the movement of bonds, what basket you've actually got accepted. So Clearstream take account all the management for yourselves. So they'll basically look at the bonds to make sure they're eligible, move them over, they'll do all the matching for you, the settlements all moves through once the bonds are in at Clearstream. So a lot of the operational is actually managed by Clearstream. So from the corporate treasurer side, it becomes more minimal in terms of the work that we have to actually do. So I think a lot of these hurdles that have prevented a lot of corporates in the past from actually going into repos have sort of been addressed with Clearstream now. So if we turn over to the next slide, I just want to talk you through how we typically trade a repo. The first thing that we need to do is to sort of set up our basket. And the first thing is to look at the acceptable collateral that we're prepared to accept. Now this can vary from corporate to corporate, and you may want to have your repo collateral only accepting the highest quality bonds, so AAA bonds only from the government, or you may be prepared to accept corporate bonds. But you define what you're prepared to accept from your bank, and that's what Clearstream will manage that basket for. So any collateral that's eligible will go into that basket. If it's not part of your eligibility or collateral, then Clearstream would reject that and it wouldn't go into your basket. The other thing that you need to consider when you're setting up a basket is possible haircuts. Now, depending on the quality of the collateral, you may decide you don't need a haircut on the collateral, or you may decide that you do need a haircut depending how risky or how volatile that bond or the asset you're actually accepting in your basket. So that's something that's worth considering. There's also, it's worth considering, is the cross-currency haircut that you may want to apply. For example, if you're investing into US dollars and as collateral you accept in German bonds, effectively you're taking an FX risk on that if the bank was to go under, because you'll be left in German bonds and you would then need to sell your German bonds in the market and obviously convert the euros back into dollars. So you may decide that taking a haircut on the currency may be something that you want to consider. The other thing is the concentration limits on your basket. It may be that you decide for certain assets or countries that you may want to limit your exposure to that country, for argument's sake. So you may link this to GDP, for example, and say I want a maximum percentage of a certain country in my basket, and therefore force the bank to give you a mix of collateral. You may also want to talk about country correlation risk. So if you've got a bank based in the UK and you may decide that you wanted to remove the risk of taking UK gilt. So if that bank was to go under and the government wasn't in a position to bail out that bank, then potentially there could be a stress on the government and therefore affect the price of your government bonds. So that's something you may want to consider depending on what type of collateral you accept. The next part of this is we trade this via Bloomberg, and we've used this RFQ function developed by Bloomberg. So basically we request for a quote from the bank, we put it in our trade terms, our tenor, so maybe we want to do this just overnight or we want to do it for a week. The bank will come back and actually price the trade, what they're prepared to do, based on our basket that we've selected. From this, this then goes into our approval screen. So the bank comes back with this price, we accept the bank's price, and we bilaterally agree the trade. From that goes into our treasury management system automatically by the STP process, and then from that automatically goes into Clearstream system. So where before we'd have to manually enter all these deals into the system, by doing one trade and agreeing it bilaterally on Bloomberg, we've eliminated the need to actually input all these trades twice into our system and into Clearstream, which makes it quite a neat process for us to actually trade repo. And then once it's into Clearstream, Clearstream will basically manage all the administration needed. So once our cash arrives there, it will be held at Clearstream. Once the bonds from the bank arrive, Clearstream will do the matching, and then at a point when both are in, the bonds and the cash will then move over. Again, Clearstream will manage the mark-to-market, any margin calls during the day. So if the bond price was to decrease during the day, Clearstream would be straight on top of that to actually get in more collateral from the bank, so we're always collateralized for that position. And then Clearstream will also report to us on a daily basis the collateral that we're actually holding at the end of the day, or we could actually log in live into ClearStream's system and see a live holdings of our collateral. So we've got full transparency of what we're actually holding for this. I think that's where I'll leave it now on repo.
Okay. Thank you very much. We're just going to now move on to the discussion and question time. We've had a lot of questions come through. The first few actually are on collateral. Probably to you, Steve. What types of assets are used as collateral by corporates in the repo market? And a very similar question, what are the securities you get when you invest in a repo? Are they shares in the bank? So two very similar questions there.
I probably didn't explain in my overview the type of collateral that our counterparties are willing to accept within ClearStream. ClearStream itself handles all types of securities. So we look at the fixed income, equities, funds, commodities, basically anything with an ISIN can be accepted as collateral within ClearStream itself. With regards to what type of assets the corporates take within the repo market, I suppose it's more important to consider the types of collateral corporates are willing to receive. While most corporates are willing to take high-quality European government bonds, gilts and treasuries, we have a number of other corporates that receive covered bonds, commercial paper and credit securities. The main consideration here, I think, is to think about the haircut or margin that's applied to these assets. As Nick mentioned before, the haircut is a percentage of what securities or collateral is undervalued to provide a buffer to cover for price movements, for example. In triparty repo, assets are revalued multiple times across the day, and the bank counterparty allows a triparty agent to move securities from the custody account in case there's a drop in value. On the other hand, in case the collateral has increased in value and there's an excess needs to be given back at any point. So we basically monitor all that on a real-time basis. So.
Okay. Along a similar line, another one. What is the protection on collateral for cash providers if failure by the agent or cash taker? Are there escrow client account arrangements with the agent?
Well, remember, as we talked about before, the collateral is held in a segregated account. So when you open up an account with ClearStream with your counterparty, the account will be in the name of corporate/bank, and that account will be the corporate's bank account. So that account with the securities held in it are basically segregated for your basic ring fence in the name of the corporate. So in the case that the bank should default, you then have access to that collateral that you can then liquidate onto the market. So you have full control over that account themselves. At no point can the bank then take that securities back. It's purely ring fenced. Again, we talk about the legal jurisdiction. Luxembourg law is one of the most safe and secure legal jurisdictions out there.
Excellent, thank you. Nick, you mentioned reduced risk in repos, but the question that's come in is a repo riskless?
No, a repo is not riskless. You've got to consider that if the bank was to go under, yes, you do have access to the collateral. You need to have ownership of that collateral, but you've also got to sell that collateral. Now, you have this open part from when you actually sell the collateral to when the bank goes under, for argument's sake. So you're going to take into account that price movement that could potentially happen on the bonds or the asset you're actually selling. So you do take a risk on that.
But Nick, you need to also remember that the haircut is factored into that as well. So the reason why I put a collateral or a margin on the collateral that you're willing to accept is to take into account a price fluctuation between when the account is frozen and when you get assets.
Yeah, exactly. So your haircut is your buffer, for argument's sake, of the actual asset movement. And some people may sort of look at sort of the 5-day volatility of that asset and then base their haircuts on that side.
Okay. Some fairly practical questions. There's two coming in here on yields. One is what sort of yields can I expect for a top-rated sovereign security basket and for an investment-grade corporate security? And actually another very similar question. So what type of yields are we looking at on repos?
In our experience of doing repo, based on our basket of high-quality collateral, we're seeing very comparable rates to what you could get in the overnight market unsecured. There's always certain banks at certain times of the month paying up for collateral more, and you may find spikes in the market when they've got an axe to actually trade. So you'll actually get more than the unsecured lending with the same bank. But as far as I can see from my experience with high collateral quality basket, very similar to unsecured.
Again, it will also depend on the term as well. I mean, we've mentioned before, banks are looking at maybe long-term cash as well. So if you're willing to go out further on your cash deposits, then you're looking at maybe higher rates. And again, it could also be down to bank relationships. So your bank is obviously taking that cash with you on an unsecured basis, secure it up. They may give you a more favourable rate to keep the relationship going and to ensure that you're not going to move elsewhere and place your cash with another competitor, so to speak. So I think you'll find that rates, as Nick said, it's very comparable to the unsecured market. Just to give you a background as well as when we speak to our corporate prospects and clients as well, we try to provide some sort of overview of the rates that we're seeing in the market. We can pull figures from our collateral management engine to give you some indicative ideas of prices that you should be expecting in the repo market for particular sets of collateral. And I'd also suggest that you speak to your relationship banks because I know for a fact that your repo desk within those banks would be more than happy to give you some indicative rates as well, not just for the high quality, but maybe going a bit further down the curve as well.
Okay. Another practical-orientated question. Who receives the coupon on the bond placed as collateral if the coupon is paid during the collateralized period?
I mean, the coupon, it always goes back to the true beneficial owner of the bond. And what you must remember is, or the collateral, sorry, within triparty, with the transfer of title during the life cycle of the trade, the bond then moves to the cash giver or the collateral receiver. But the actual true value of that bond, the coupon and everything else, actually belongs to the ultimate owner. But what Clearstream will eventually try to do within triparty is that if there's any sort of corporate action coming up on that bond or that piece of collateral, we will look to substitute that piece of collateral out to bring in another eligible piece about 2 or 3 days before any type of corporate action due to take place, and then replace that bond again once the corporate action has taken place and the beneficial owner has benefited from that particular from the revenue or whatever the corporate action was. So really, I'd say the idea is that we look to sub it out if possible. If not, then we will manufacture the payment and then pay it back to the ultimate beneficial owner.
Okay, a very, very quick one here. What is the minimum amount you need to have to invest in a repo?
I would say you could go down as low as $1 million. I think it all depends on the bank that you're trading with. If we take in everything with regards to the setup cost and what it costs to get involved with the repo, the triparty, I would say what we tend to find in our market is sort of $5 million would be the lowest. I'd say the average from a corporate investor would be something between 20 and 50 million. We even have some extremely large corporates that are trading volumes of the hundreds of millions plus on a daily basis. So it all depends. You've got to realise that the administration involved from a triparty perspective. So yeah, I think Nick, I don't know if you would agree on that. I'm sure you.
Yeah.
Typically, you guys.
Yeah, I mean, I'd say $1 million most probably the lowest sort of the banks will be prepared to actually trade on this. But again, that depends on your bank, I guess. It's a conversation.
Again, it's a relationship thing. So you talk to your relationship bank. They may be willing to come further down the scale with regard to volume, just so they can ensure they keep you happy and keep the business. So.
Okay, moving along. Both of you mentioned the trading platforms 360T and Bloomberg as examples. How easy is it to trade repos on these platforms?
Well, I can't speak for 360T because I've not used that before, but I can talk on the Bloomberg side. It's extremely easy. You basically, as I said, you request your ticket through the bank looks at tenor that you require prices, and then you both accept the trade bilaterally, and then from that we end up with the STP straight into Clearstream system and straight into your treasury management system. So it's extremely easy for us using Bloomberg.
I would say from the 360T perspective, it's more of a price discovery platform. So basically what's happening is from a setup perspective, if you're already a 360T user, it's basically just the triparty module within there. Then also with regard to the banks on the other side, they will obviously show, or that you'll have your baskets on the 360T website or on their triparty module. The banks will sign up to the module as well. We already have a number of banks that are on the platform as well. And basically what you do is you put out what's called a request for quote. When you're willing to give cash, you'll then send that out to the various banks that you wish to trade with on the platform. They will then see this and have 5 minutes or 10 minutes to respond. They will then put their price in. They won't know what the other competitors are pricing for that particular basket. Once the prices come in, basically, and that's been agreed, then from then onwards, and you execute, you take the best price. Once that's been executed, then your job has been done. The instruction, say, comes from 360T from both sides, and Clearstream will carry out the collateral management. So, in essence, once you signed up to Clearstream as a client and you sign up to the platform, triparty, 360T, very straightforward. We also, apart from Bloomberg and 360T, you can also use the Clearstream web front end as well. Creation online to instruct. We give full training on that. We also give that to our clients on setup. And also, if you're a Swift house, you can also send your instructions via Swift as well. So there are various options for your collateral management triparty participation.
Okay, we've probably got time for one or two more questions. Here's an interesting one. Would some of the corporates on the webinar consider investing in a fund which invests solely in high-quality repos? Your thoughts, Nick? Would you invest in a fund, or would you continue to invest directly?
I think that's another option with the money market funds. Potentially, if you invest in a money market fund that solely invests in US Treasuries, that's another way of actually getting exposure of that rather than going down the repo route, or a money market fund that invests in European government debt. That could be an option as well.
Okay. Here's an interesting one for you, Steve.
Thanks.
How do tri-party agents make their money?
Basically, it's a very good question, and I obviously didn't mention this before. But with regard to tri-party, it's always the cash provider, the cash taker that pays the collateral management fees. The cash provider, it's the only payment that the only charges for them would be sometimes cash movements, for example. There may be a small account management fee, account maintenance fee, but apart from that, it's all fee-free. It's always in tri-party. It's the cash taker that pays the fees.
Okay. And Steve, another quick one for you. You mentioned the Clearstream repurchase conditions, CRC. How many banks have signed up to CRC so far?
I think the current list we have about 25 to 30 banks that are currently signed up to that. And when I say they're obviously mainly your tier 1, tier 2 type organisations. There will be a number of those that will be your relationship banks as well. Again, I can't stress enough how important this is for Clearstream, and I think for really the tri-party side of business, and also with regard to getting corporates on board, it's getting a lot of focus within our organisation. So we, apart from having the banks are on already, we have a pipeline of maybe 15 to 20 other banks that are in the process of getting these CRC signed as well. And again, the idea is to get all the relationship type banks signed up to the CRCs, because we realise that, and they also realise, because I have a number of clients that are your relationship banks, realise how important the CRCs for them to get them access to the corporates without the need to go into the GMRA negotiations, the cost, the expense. For maybe, they may be corporates that they trade with and may only trade 2 or 3 times a year. So to go through that expense from both sides is probably, the CRCs is an easy entry.
Okay, excellent. Thank you, Steve. So I think the time has come to wrap up. First, my thanks to our presenters and to Clearstream for their sponsorship. Thank you to everyone who has submitted a question. We've had many come through, and I'm sorry that we won't have time to answer all of them. But I hope we've nonetheless given you a good understanding of investing in repos. As I mentioned at the start, we'll be putting up a recording of this webinar on the ACT website, along with the presentations in 2 days' time, and we'll be sending you all the link to that, together with a link to our current briefing note. Looking forward to the rest of the year, here at the ACT we have some major conferences in the UK and abroad, so do take advantage of those if you can. We've got the ACT annual conference in May, which is well worth attending, and I know there will be a masterclass on investing in repos at that. In addition, we have a program of webinars being arranged throughout the year, Our next one is Demystifying Supply Chain Finance on the 9th of April. So thank you again for listening, and if you can spare a moment to provide some feedback on the webinar, we would be very grateful. Just select the feedback widget in red. The facility to do this will remain open for a short while after the webinar ends. So thank you and goodbye.